Hey guys, welcome to today's webinar on how to navigate through a volatile market. If we are audible to you, can you please confirm in the chat box? Yeah, I think we're audible, so we're good to go. So welcome to today's webinar on how to navigate through a volatile market. We have a very special guest with us today who has managed portfolios which have generated returns worth 21% in 2022 as compared to 3% by Nifty, yes, almost 7 times more. He pursued his BTech and MTech from IIT Kharagpur, and today he's associated with Gulak as investment head. You can find all the portfolios from Gulak on smallcase, and it's a privilege to have Mr. Vivek Sharma with us today. Vivek Sharma sir has nearly 20 years of experience in trading and investing. And I'm ready with a notebook because I'm sure we will take away a lot from this webinar. So welcome, sir. A very warm welcome to you. We look forward to an enriching session with you.
Thank you, Ekta, for having me. Thanks a lot.
Yeah. So the very first thing I did when I heard of Gulak was check their returns, and I was blown away. Like the portfolios have given 21% as compared to 3% generated by Nifty. So what is the strategy behind this? Can you guide our viewers also like on what kind of investment strategy they can adopt for such returns?
Yeah. So let me tell you about our investing philosophy. So Gullak portfolios are made by ST Advisors. And ST Advisors has been in this industry for over 14 years now. We have been into quant management industry for over 14 years. We have been doing this for a while now. So the idea with Gullak portfolios was whatever skill set that we have developed in managing our investments and investments for institutions, we wanted to offer same kind of skill set, same methodology, same portfolios to retail investors as well. So that was the idea behind Gullak. And what we do in Gullak is pretty simple, actually, that we are not after any one specific theme. Okay. So what we wanted to offer to retail investors was a broad-based portfolio which you can invest in for the very, very long term. Okay. So you don't need to run after themes, because what is happening these days is there's so much of noise in the market, right? So there are technical analysis, there are fundamental analysis. Obviously, there are hundreds and thousands of companies. There are multiple sectors, which sector to invest in, which stock is good right now. All of that thing is there. So a retail investor gets overwhelmed by all of this information. He or she does not have the time to analyze the markets, analyze the stocks, neither the skill set to do it. And he should not be doing it. So what we are doing is we are creating these portfolios. So as an investor, it's maybe you can say your job to figure out what is currently working in the markets or not. Now we are doing that in the background. So as of now, we actually analyze each stock on more than 100 factors. Now this could be momentum, value, some of the popular ones that you might have heard of, and these could be something like macro. How is oil prices impacting, or FX, or interest rates? All of that. We study the impact of all of that on our stocks, and then we take out of them, we take out the best 10, 12 stocks which people can invest in the current markets. That's how we do it. So to summarize this, we don't focus on one specific theme, whereas it is much more diversified portfolio. And that's why I think it's not only 2021 that we have outperformed. We started Gullak in 2020. And if you look at the year-wise returns of 2020, 21 and 22, we have been able to give our investors pretty good returns as compared to any other benchmark.
Yeah. So with this, I have another question. Like you're saying, it started in 2020. But if I have to see if I were to invest in, say, small case or a mutual fund, and if I look at mutual funds performance, it's giving me an assessment of like past 10 years. It's a result of the past, say, 10, 15 years. But small case is fairly a new concept, and I can see only returns of around for the last 3 years.
3 whole
So,
years. Yeah.
yeah, so the last 10, 15 years, the market has had its share of ups and downs, and probably the fund would have weathered all of this. But how do I evaluate whether the small case will be able to sustain those returns? And it's not only, like probably a cyclical return that they've earned, say, during the peaks that we had, a bull run that we had.
Yeah. So I think it's a very good question. So 3 years, it is fairly decent time, but it's not very, very long term. As you mentioned, some of the mutual funds have maybe around 10 years of experience. So one thing, Ekta, what we have got to realize is that one thing we have got to recognize is, first of all, beating the markets is a very, very tough job. So
Yeah.
even mutual funds, if you see, I think roughly 70 to 80% of the mutual funds over 10-year period would underperform the market, right?
Yeah.
And that is with any active portfolio. That is one thing that every investor who is investing in active funds should know about. Now, you asked about long term. See, the idea, you have to think about it in much more qualitative way, because there are some returns. Obviously 3 years is the past track record we have seen. Another thing that you can see is, if the same strategy had you been running for past 10 years, what your returns would have been. So you can actually go to small case, and on our portfolio page you can go to the fact sheet and find out the historical returns. I understand those are back tested returns, but it gives you some sense of how this strategy would have performed over long run. So across all these years, we have actually, even in the back test and especially in the last 3 years, we have outperformed the market. And I'll come back to that point again, because of our methodology, that we are not running after one specific factor or the way we select stocks. So that is not unidirectional, or that is not just based on one specific theme, but it is much more diversified, and that's why we are able to do so, able to beat the returns. And I think if you just look at the back testing returns, that will actually give you a pretty good idea of how this strategy would have performed. And that is, anyone who is looking to invest in Gullak or any other portfolio should definitely at least look at those historical back tested returns as well.
Yeah. So one takeaway from I think your message was active funds will always perform well, and people should choose active funds. But here I have another question. Like say people we have often heard saying, if you would have invested in this company for like say over 10 years, today the price would have been so much, right? So that is kind of a passive investment. Like for a long term, you've just left that amount in that particular share. And
Yeah.
today we all talk about active fund management. Can you throw light on active versus passive, and which one would be your pick?
Yeah. See, my pick, it's not necessarily that investors have to pick one style of investments. It's, I think, for all investors, it's usually a mix of both active and passive. And I myself invest a lot in active funds, specifically my company's active fund. But at the same time, I also invest in passive. So it's maybe, for me, it's something like 60 to 70% in active funds of good luck, and rest 30 to 40% in passive funds. And I think that's the way it should be for all the investors. Although the mix can vary, but some part of active fund and some part of passive fund should definitely be there. And you mentioned about investing in one company for very long term. Actually, it's very, very, if you have invested that ways, you have to be very lucky actually that it turns out to be a multi-bagger. There are a couple of things that we should be aware of when we talk about these multi-baggers. First of all, it's obviously very hard to find out if this specific company would turn out to be a multi-bagger in next 10 years. Obviously, that is very, very difficult thing to do. Second thing is, even if you have identified, if you look at past multi-baggers, they've usually been very, very volatile,
Correct.
right? So in the good times they have given good returns, but in the bad times they have also corrected much, much bigger than the markets. So in order to hold on during that, volatility requires altogether different level of conviction. And also, if you have identified, it will actually be good for you if you are able to put some substantial money, because most of the times we investors, when we do our research, we are able to put some money behind it. But if it is really, if you have that conviction, it should have maybe 10, 20% of your overall portfolio in that company. So So overall, these things are very, very tough to do, and there's usually an element of luck involved when we talk about one specific company. And that's why we as investors should always think about not a company, but a portfolio or a fund.
Yes.
And uh, what really you are asking me about multi-bagger companies, but I think a much more surer way to build wealth, because that is what you are looking after, right? Everyone
Right.
wants to build wealth over time, and one
Yes.
much more certain and sure way of building wealth is keep investing through thick and thin in good funds. I think that is what is very important, because what happens is the common mistakes that right now markets are correcting. There's a fear, obviously, in the markets what would happen, and that's why people. I just today only read that in ET that people are now stopping their SIPs, their systematic investment plans, and some of them
Yes.
might be taking out money. And that is, I think, what causes harm to overall compounding in the long run. What you should instead do is, because there's fear in the market, you should actually try and invest as much as possible, because as of now, you're getting companies at fairly good valuations. And what we have seen even in the data is that if you invest during times when the markets have corrected, obviously, I'm not saying this is the bottom, it can still go down more. But if you have, let's say, at least a 3 year, 5 year horizon, this is pretty good time to invest. So my point being that we should not run after these figuring out those multi-bagger companies. Rather, pick good funds and keep investing in it through the times in a very, very disciplined way. I think that it's very simple advice. uh, it is maybe hard to do, but I think that is one very certain way of creating wealth over long run.
Yes. So from this, I have two, three questions. But so since today's, I'll take it up later. So since today's session focuses on how to navigate through a volatile market, and you were talking about there'll be a lot of volatility in the market and stay invested through that. But can we first address an answer to our viewer, like explain to our viewers what is meant by market volatility?
So market volatility in very simple terms is the movement of share prices or the movement of index throughout these days and weeks and months. So that is meant by market volatility. Mathematically, it's just measured as standard deviation of returns. That's how it is mentioned or measured. But it's just how volatile markets are. That means how much they are moving on a daily or a weekly basis. And if you see over uh, last 18 months or so, I think October 21 is when our markets made a high. After that, we have just been in the range and keep on going up and down, and that's what it is happening. So that's what we say, that markets are currently volatile. There is obviously, in the last couple of days and last couple of weeks, there have been fear. First of all, it started with the Adani crisis, and right now in the US, some smaller banks are having those crises, and because of which US markets are correcting and our markets are also, especially banks, are taking a hit. So that's what it means by volatile markets. But in that, what I would like to highlight is, if you are a long term investor, it would really help you if you are not tracking the markets and tracking the news on day to day basis. It really does not help you at
Yes.
all. So I think monthly is what you should track the markets and track your portfolio, or even quarterly is just fine, frankly. But on a daily basis, it serves no purpose of investors to track these markets on a daily basis. It just creates fear in our minds, and then we take steps uh, which are not really helpful. On a daily basis, once a month, if you track your portfolios, that's just about fine, actually.
Yes. So you were talking about since October 21, the markets have seen a bearish trend as
Yeah,
such. If we see like the Nifty 50 companies have done really well, like their earnings have increased a lot, but Nifty,
exactly.
there is no growth as such in Nifty. We've seen a stable, like we've come back to
Yeah,
the same levels. So people are seeing a bearish trend, and people are like, let's not invest at the moment, and let's save. Like how you said, people have stopped their SIPs. What would your advice be? Like, should they continue or start investing at this moment, or should they wait for a while and watch
Yeah.
the market?
No, I think definitely they should keep investing. No doubts about that. As I mentioned, this is a very good time. You talked about Nifty specifically. Nifty companies doing well. So if you see their earnings of Nifty 50 companies, since even if you see from October till date, the earnings have actually grown at a very healthy pace, and
Correct.
we expect that to continue over next few years. Definitely. So definitely these companies are doing well. Their stock prices are not doing well. And as a business, what you should just consider is if these companies are doing well, our economy is doing well, then there is no reason why one should actually stop their investments right now. I really don't feel any reason at all one should stop these investments. So what is happening right now is this certain term as known as price to earnings ratio, PE ratio.
Yeah.
That gives you some indication about how much you are paying for the company. So earlier, this PE ratio can go as high as 30s and 40s, and it can go as low as 15 or even lower. So right now, where this PE ratio is, it's at around 20 levels, which is fairly, I think, average. It's definitely not expensive. So what you're paying for these companies or buying when you're buying these businesses, actually, when you invest in stocks, you're buying businesses. So when you're paying for these companies, is definitely very, very reasonable valuations you are entering in. And again, if we look at the data at ST, at Gullak, we take a very, very data driven approach. So if you see, let's say over next 3 years, an average returns over 3 years comes out to be roughly around 40 to 43%. That's the average returns over 3 years. But if the markets are down for last 1 year, if the markets are in negative, at that time, if you invest for 3 years, that then the average increases to around 53, 54. So what
Yeah.
that tells us is if you are actually entering the markets when the markets are down, you should expect over next 3 or over next 5 years, you should expect more than average returns. And that is what we are saying to our investors also, that they should continue their investments, and not only continue, maybe if they want, they can increase as well. So one very simple way of managing your investments would be investors in the first step should just recognize that how much risk they are comfortable taking, and then accordingly determine their asset allocation, right? So what it means by asset allocation is how much of your, let's say if you want to invest 100 rupees, out of that 100, how much money you should invest in equity markets, which will give you growth, and how much you should invest in debt markets, which will keep your portfolio stable.
Yeah.
So if you are an aggressive investor, maybe you should have follow something like 80-20. Let's say 80% in equities, 20% in debt. If you are kind of moderate, maybe have 50 to 60% in equity and rest in debt. And if you are conservatives, you should still have around 20, 30%, at least that much in equities, if not more, right? And you
Yeah.
just stick to your asset allocation, and uh, again, you'll do well to ignore all the news that is going around, because that is just creating the fear in the markets. That's about it. It's in the long run, this will really have no impact on our businesses or on the economy.
So when you're saying investment in debt market, so a lot has been talked about investment in equities. We don't see people talking often about debt market. So can you please throw
Yeah.
light on where can we invest, or what exactly kind of companies are there in debt market?
So debt markets, the way I see debt markets or the debt investments is, it's like when you're driving a car. Would you drive a car which does not have brakes in it? So, if investing is like driving a car, uh, your equity investments, which gives you growth, is like an accelerator, which helps you move faster, which helps you move ahead. And the
Yeah.
debt part is actually what keeps your portfolio safe as well. So you should have those brakes, obviously, in your car, So even in your investments, you should have some part in debt, which keeps your overall portfolio safe, right? If you want more safety, you would invest more part of your allocation of your portfolio in debt. And if you want maybe less safety, invest less, but have some part in debt. And how to invest debt in debt is, I think, the one of the best ways is invest through mutual funds. Yeah.
Okay.
So if you invest through mutual funds in debt markets, pick any one or two debt mutual funds and allocate equal part. Just see to it that the debt mutual fund is pretty diversified in nature. It holds not only short term or long term, but long term, short term, and medium term debt, all of that. And otherwise, the best way to invest, I think, would be through debt mutual funds. They are pretty good taxation wise also. There are variety of mutual funds which are available. So I would recommend debt mutual funds for taking exposure in debt.
Yeah. Okay. So, thanks for these wonderful tips, sir. You're giving very actionable tips. So, here I would like to ask one more question. Like, say, me as a full-time professional, or I have like people like who have a full-time job or a business. How should they plan their investments? Like, should they go for SIP base? Should they go for small case? Like, how should they plan their entire investment journey?
Yeah. I think a product, we as investors tend to focus much more on product. Now, product are important to an extent, obviously, like you said, good luck in good luck. We have been able to give our investors pretty good returns over last 3 years. So products are important to some extent, definitely, yes. But I think more important is your investment plan.
Correct.
So, one thing that I spoke about is the asset allocation. That is very, very important. Recognize the right asset allocation for you, right? And second thing is a disciplined plan in which I'll tell you two of the biggest mistakes investors make, because of which they are not even able to get the index or the average returns. Those two mistakes are, we tend to pick individual stocks on our own. Let's say we talk to our friends or look on YouTube for investment tips, or something like that. We keep picking individual stocks, and that is, I think, most of the investors that who pick individual stocks, because as you said, most of the investors, they're either doctors or lawyers or marketing professionals, so investing is not their full-time job. So I don't think they should pick individual stocks themselves. That is one mistake. And second mistake we as investors make is time the market. So we should
Yeah.
not call the market that right now it's very, very expensive, so I should just sell out. Or right now there's fear in the market. I think the market is going to go down, so I'll stop my investments. And when they go down, or maybe redeem also my investments, when they go down, I'll enter again. Because these short term, frankly, no one knows what is going to happen in the very short term. Let's say next few weeks or even next few months. I, for one, don't know, frankly, and I think most of the professional investors, most or all, would not know what will happen in the short run. Yeah, what we know is over long run, over next 3, 5, 10 years, Indian economy is very well placed to do good. That's what we know. So
Yes.
invest for the long term. Don't think about products so much, but think about your investment plan and investment planning with the discipline, and avoid these two mistakes. Just figure out that how much, let's say you want to invest or save 10,000 or 20 or whatever that number is. Keep doing it every month, and irrespective of whether the markets are low or very high, just keep doing it. Only thing that you have got to remember is, when your goals are very near, let's say 1 or 2 years down the line when you need money, before that you start shifting from equity to debt. That's the only thing you need to do. Otherwise, you should just stick to your investment plan and keep doing SIPs. uh, और बिल्कुल एक्चुअली मार्केट्स के बारे में कुछ नहीं सोचना चाहिए. Those are the investors who actually do well in the long run, who
Yeah.
keeps it simple actually.
Correct. So while you were saying keep it simple, I also observed that Bullock has very few shares in its portfolio.
Yeah.
I think around 6 or 7, if I'm not wrong.
No. We would have around, on an average, we keep about 12 stocks in our portfolio.
But yeah. So
Yeah.
how should like and as an individual investor, how many should I have? And can you throw light on the significance of having very few stocks? It's spoken about time and again.
Yeah. Yeah. So again, I would like to point out here is that investors should really not pick stocks themselves. And in terms of how many stocks you should have, it again depends a lot on your risk profile. So if you
Yeah.
want I think 12 is 10 to 12 is the least you should have. And if you're just investing through mutual funds, let's say each mutual fund has 30, 40, 50 stocks at least. So you end up taking exposure or investing through mutual funds in those many companies. So it totally depends on what you want to achieve through your investments. If it is a faster growth, so again, one part of my investments which are into Gullak, that is because I am taking risk, but I want to grow at a much faster pace than the market, right?
Yeah.
And another part, roughly 30 to 40%, I'm investing in index funds. That's it. And which will have exposure to top 50 companies. And I don't need to do
Yeah.
anything about it because that's a I find it very beautiful concept of index, because if you're just invested in index, your money goes into top 50 companies. If one company is not performing, then they themselves will remove it from the index and get a company which is doing well. So you don't need to manage yourselves, and your money always stays in top 50 companies. And similar approach we are taking in Gullak funds, that when I earlier talked about factors, uh, अभी last 2-3 साल से momentum was the big theme,
Yes.
and lot many investors were investing in momentum. Now the problem with momentum or any factor is कि वो कुछ टाइम के लिए काम करता है, फिर टाइम कुछ काम टाइम के लिए वो काम करना बंद कर देता है, राइट? सो व्हाट हैज हैपेंड विद मोमेंटम इज 2021 से पहले उसने काफी अच्छा काम किया, बट इफ यू सी द मोमेंटम रिटर्न्स और द रिटर्न्स ऑफ पोर्टफोलियोज विच आर फोकस्ड ऑन मोमेंटम, वो काफी लॉस मेकिंग रहे हैं लास्ट 1-1.5 साल से। ठीक है,
Correct.
तो हम भी यही करते हैं कि हम डाइवर्सिफाई बनाते हैं उसे, हम सिर्फ मोमेंटम पिक नहीं करते। जिस टाइम मोमेंटम काम कर रहा था हमने मोमेंटम पिक किया, बट अभी मोमेंटम काम नहीं कर रहा है, अभी वैल्यू काम कर रहा है। तो अभी हम मोमेंटम को नहीं वेट देते, हम वैल्यू से पिक करते हैं कि लास्ट 1 साल में देखा जाए तो मोमेंटम हैज लॉस्ट, वैल्यू हैज पिक्ड अप। आपने सुना होगा कि वैल्यू स्टॉक्स आर डूइंग वेल नाउ फॉर लास्ट 1.5
Yeah.
ईयर। तो हम भी काइंड ऑफ इंडेक्स जैसा ही कुछ काम करते हैं अपने पोर्टफोलियोज में कि जो फैक्टर्स परफॉर्म नहीं कर रहे हम उन्हें इग्नोर करते हैं, और जो फैक्टर्स अभी काम कर रहे हैं हम उन्हें ले लेते हैं। तो जब मोमेंटम काम कर रहा था हमने मोमेंटम को पिक किया, अभी वैल्यू काम कर रहा है तो हम वैल्यू को पिक करेंगे। कल को अगर मोमेंटम काम करना स्टार्ट कर देगा, वी अगेन शिफ्ट। सो वी आर नॉट मैरिड टू वन स्पेसिफिक आइडिया, right? तो हम भी वैसा ही कुछ काम करते हैं थ्रू आवर मेथोडोलॉजी लाइक इंडेक्स। सो अगेन कमिंग बैक, आई थिंक it totally depends on your risk appetite. If you want to take with some part, if you want to take higher risk and you expect higher growth, then invest in concentrated portfolios, which is having maybe let's say 10 to 15 stocks, and some part which you want to keep diversified and play it safe, then you invest in those portfolios which have higher number of companies, something like 30, 40, 50. Yeah.
So, when you were saying about factors, so an individual investor cannot pick factors. You also mentioned it earlier. And so you said
Yeah.
people should go focus on choosing good funds. So
Right.
how does one decide which is a good fund? Like, can you share some, some metrics, what kind of analysis they can use to identify a good fund?
I think one is the team. One is obviously what we all see is the returns, right?
Yes.
Another factor, one very important factor is the team who is running the show. If that team is credible, so you know that in Gullak we have been just doing it for 3 years, but this team is actually ST, where we have been doing the same thing for last 14 years. And in
Yes.
fact, one of our we also run a PMS in ST, which has never lost money in last 14 years. Never, even in a single month, we have lost money. So that is quite an achievement. So you should definitely look at what other things that team have achieved, what is their skill set, and then invest. So look at not only returns, but the team, and also have some idea about the methodology, because that methodology is very important. It should not be a risky methodology, In the sense, again, when I keep coming back to that thing, that it should be much more diversified. The way you select stocks, जैसे आप बोलेंगे कि अगर जैसे आईपीएल में if you have to select a team, you would select few batsmen, but सिर्फ बैट्समैन से आप टीम नहीं बनाते. आप बैट्समैन भी लोगे, कुछ बॉलर्स भी लोगे. बॉलर्स में भी आप फास्ट बॉलर्स लोगे, मीडियम पेसर्स एंड स्पिनर्स, डिपेंडिंग ऑन द चिप pitch. And even in batsmen, you'll have few batsmen who play well fast bowling, whereas few batsmen who can play well spin, things like that. So you make a diversified uh, team, right? तो इसी टाइप से जब भी आप फंड सेलेक्ट करते हो, और आजकल जैसे स्मॉल केस पे बहुत ज्यादा फंड्स आ गए हैं और
Yeah.
आइडियाज बहुत सारे हैं उसमें, है? तो आइडियाज वही हमें देखने चाहिए विच कैन लास्ट फॉर अ मच मच लॉन्गर ड्यूरेशन. तो वो थोड़ा सा उतना हमें अपने आप को एजुकेट करना चाहिए कि किस टाइप के फंड हमें स्टेबिलिटी दे सकते हैं और रिटर्न्स दे सकते हैं फॉर वेरी वेरी लॉन्ग पीरियड्स ऑफ टाइम.
Yeah.
दैट इज
So
वन अनदर इम्पोर्टेंट फैक्टर.
yeah. So you're talking about some ideas like to focus on. Like, can you talk about, like, say, probably it'll be some industry based, some sector based.
Right.
So can you throw light on what sectors you are looking at, say, in
Right.
the next few years? What kind of ideas
Yeah.
you are
So,
willing to invest?
yeah, I think it's a good question, and I don't know. The answer to that is I don't know. Why? Because the way we work, Ekta, is we are a quantitative fund. ठीक है, तो
Correct.
हमारा काम ये है, वी मेक द रूल्स. ठीक है, वी मेक द रूल्स दैट वी वांट टू पिक अ कंपनी जिसकी ग्रोथ रिटर्न्स, लेट्स से उसका स्टॉक प्राइस ऐसे मूव कर रहा हो इन अ सर्टेन वे. द स्टॉक प्राइस इज नॉट गोइंग डाउन, इट शुड बी moving up in a certain fashion, right? The
Correct.
volumes we study it's all the fundamental data. उसके results कैसे आ रहे हैं, वो अपने competitors के comparison में कैसे results ला रहा है, all of these things we study, but we make the rules. So we make the rules around this, and then the machines will pick stocks based on those rules. तो when I said we have more than 100 factors, हमारे पास वो 100 से भी ज्यादा रूल्स हैं जिसके बेसिस पे हम कंपनीज पिक करते हैं, और कंपनीज को हम अपडेट करते हैं हर मंथ, at the start of every month, because we get lot of new data. तो this is a very new way of doing things in India. अभी तक क्या होता था कि एक फंड मैनेजर होता है और उनके अंडर कुछ एनालिस्ट होते हैं, and then they study the markets, they study the companies, the businesses, and the sectors and the economy. ठीक है, तो वो एक तरीका है स्टॉक्स पिक करने का, और एक ये जो हम कर रहे हैं विच इज क्वांटिटेटिवली डूइंग थिंग्स. बोथ थिंग्स आर डिफरेंट. This has some advantages over the traditional method, because here, because we use computers, data crunching so much, we are able to uh, make sense of huge amounts of data, which is actually not possible by a human fund manager. तो हम
Correct.
जितनी चीजें एनालाइज कर सकते हैं थ्रू कंप्यूटर्स, वो बहुत मल्टीपल टाइम्स है, एक्चुअली 100-200 टाइम्स है ऑफ व्हाट a team of fund managers can do, right? And because we are able to analyze so much, हमारे पोर्टफोलियोज इसीलिए अच्छा भी कर रहे हैं. ठीक है, तो when you ask me about a specific sector or a stock, I am unable to give you any answer, because these things are picked by my algorithms or the machines. What
Yeah.
I and my team of quantitative researchers, what we are doing is we are making the rules how to pick the best stocks. तो हम डायरेक्ट स्टॉक्स नहीं पिक करते, हमारा पूरा जो एफर्ट जाता है रिसर्च में, वो सिर्फ यही होता है कि what rules we should make in order to pick stocks. इसीलिए अगर आप पूछते हैं कि कौन से सेक्टर्स या कौन से फैक्टर्स होंगे मेरे पोर्टफोलियो में, I cannot tell you, I don't know, and frankly I don't care also, because मेरा पूरा एफर्ट वही है, मशीन रूल्स बनाने में जा रहा है. एट द एंड ऑफ द डे अगर वो मेरे को बोल रहा है कि इंस्टेड ऑफ दिस स्टॉक इज बेटर, मेरे को पता होगा कि किस किस रूल्स की वजह से मैं ये वाला स्टॉक निकाल रहा हूँ और किस रूल्स की वजह से ये वाला स्टॉक ले रहा हूँ. बट दैट्स अबाउट इट. कौन सा स्टॉक आएगा या नहीं आएगा ये मेरे को पता भी नहीं. तो
So
अगेन इसमें एक एडवांटेज और ये होता है, बिकॉज रूल्स आर मेड एंड मशीन्स पिक द स्टॉक्स. हम एज फंड मैनेजर्स वी आर नॉट टू attached to a specific idea or a specific stock. तो बहुत ही अनइमोशनल वे से हम ये करते हैं जैसा कि होना चाहिए. वी डोंट गेट इमोशनल कि मेरा एक स्टॉक पैसे बना रहा है या लूज कर रहा है. बहुत ही
Correct.
ऑब्जेक्टिव रूल्स ड्रिवन अप्रोच है ये.
So when you're saying rules driven approach and you entirely base all your stock picking on the data. So data is backward looking, right? Like everything based on past. What happens in case so quant trading is usually known as backward looking. So what
Right,
happens in case there are present some situations, some factors come up in the
right,
present or some future
right.
factors? How are those taken into consideration?
आई थिंक एकता, दिस इज अ वेरी गुड क्वेश्चन. एंड मेरे को लगता है कि ये एक बहुत बड़ा मिथ है अराउंड क्वांट इन्वेस्टिंग. तो
Yeah.
जैसे हम बोलते हैं कि डेटा लेके हम बना रहे हैं रूल्स, और डेटा मोस्टली बैकवर्ड लुकिंग है. तो अगर आप ये देखिए कि एक जो कन्वेंशनल फंड मैनेजर है वो कैसे काम कर रहा है, तो वो भी जो जो भी चीजें देख रहे हैं वो भी हिस्टोरिकल ही है. Excuse me. So
Yeah.
he is also looking in the past data and making assumptions and then deciding which stocks to select. तो जो क्वांटिटेटिव तरीका है वो भी इन दैट वे इट्स क्वाइट सिमिलर टू द ट्रेडिशनल फंड मैनेजर जो कि पास्ट का डेटा लेके स्टॉक्स पिक करता है. तो उस सेंस में तो सेम है. बट इट्स नॉट फॉर क्वांट इन्वेस्टर्स और क्वांट फंड मैनेजर्स. इट्स नॉट ओनली बैकवर्ड लुकिंग डेटा. हमारे पास हम कुछ कुछ मॉडल्स ऐसे यूज करते हैं जिसमें वो प्रिडिक्ट आगे का प्रिडिक्ट भी करता है, एंड वी यूज दैट इंफॉर्मेशन. सो वी प्रिडिक्ट कि if oil prices are increasing, if they increase by so much, how it can impact my stocks or my sectors. If interest rates, कल को अगर interest rate बढ़ना बंद हो जाते हैं और they start coming down, तो we
Yeah.
model all of those things, और फिर हम उन सिनेरियोज में देखते हैं कि कहाँ मेरे को बेस्ट रिस्क एडजस्टेड रिटर्न्स मिलेगा. तो आई एम नॉट ओनली आफ्टर कि मेरे को मैक्सिमाइज करने हैं रिटर्न्स. दैट इज नॉट व्हाट आई एम आफ्टर, नॉट व्हाट वी आर आफ्टर एज अ कंपनी. हम ये देखते हैं कि मेरे को मैक्सिमाइज करने हैं रिटर्न्स बाय टेकिंग द लीस्ट अमाउंट ऑफ रिस्क. तो मेरे को रिस्क हमेशा ध्यान में रखना है कि आई डोंट वांट टू टेक एक्सेसिव रिस्क, क्योंकि अगर मैं ज्यादा रिस्क लेके ज्यादा रिटर्न बना रहा हूं तो दैट इज नॉट रियली, आई एम नॉट डूइंग अ ग्रेट जॉब. अगर मैं उतना ही रिस्क लेता हूं जितना इंडेक्स में है, मेरा रिस्क उतना ही है, और उतने ही रिस्क के साथ अगर मैं एडिशनल रिटर्न्स जनरेट कर पा रहा हूं, देन आई एम डूइंग अ गुड जॉब. तो हम हमेशा एक पोर्टफोलियो को ऑप्टिमाइज करते हैं बाय रिस्क एडजस्टेड रिटर्न्स. सो देयर आर मेनी मेनी थिंग्स इवन इन क्वांट which is forward looking also. And the second point that I mentioned, ki even in the conventional fund manager, he would
Yeah.
also look at the historical data and make the decisions.
Correct. So yeah, so my takeaway from this was even in case there is volatility in market, don't look to maximize your returns. Just look to maximize your returns. Make sure to keep your portfolio in such a way that it can manage the risk, or you will be able to manage the risk, or the funds will be able to manage that risk. So your aim should be to minimize the risk as much as possible. So this was
So
my takeaway from this session.
yeah,
And also, please, and also from what Sir said, continue in SIP investing in that mode. Stay
definitely.
invested during the market volatility or during tough times. Don't sell off. So these were my takeaways. If you have any takeaways, do let us know in the comment section below. Thank you so much, sir. I learned a lot from you today, and I hope in our viewers would also, it was very value added for them in their investment journey. So thank you so much for joining us today.
Thank you,
Thank
Ekta.
you.
Thanks a lot.
Thank you.